As we are back with another Deal Finders podcast, and this is going to be one that should actually make you some money. So spend a little bit of time with us, and you might actually learn why it is a not an expense, but an income driver to have the right tax and bookkeeping services working for you. I've got our friend Stephen Hall, who's in a mastermind with us, and we've been talking for months now after a meeting about how important this is. So, Stephen, I'm going to let you introduce yourself to all the listeners out there and tell us who you are, where you are, and a little bit about the company.
Thank you, Andrew. And thanks for having me on the podcast. I'm excited to be here today. Yeah. So, a little bit of a background. My name is Stephen Hall. I'm a second-generation owner of Robert Hall & Associates. We're an accounting firm based out of Los Angeles, where we eat, sleep, and breathe taxation for the real estate investor, for anyone in the real estate ecosystem. We handle over 1,000 landlords with all of their tax needs, whether they're flippers, owners of apartments, single-family homes, selling notes, mobile home parks, storage facilities, you name it, we eat, sleep, and breathe it.
Wow. So it's probably safe to say that you guys have a little bit of experience with helping do books and taxes and strategies for real estate investors, right?
Absolutely.
And so this is before we got on, you said, or we were talking about how do we keep people engaged on podcasts where it's finance, and we're talking like counting pennies, right? This is not always the most exciting piece. You know, people would love to watch our YouTube videos, and y'all, if you want to watch this, you can go to the YouTube channel. But they love watching YouTube videos and listen to podcasts about demoing houses and tearing up, countertops, and all those videos are great. But the ones where we're talking about tax strategies, they just don't seem to hit as well as all the others. But I think, and I asked you this question, and I'll ask you again, what is the biggest misconception of your business? Why do you think that investors don't dive in on videos and information about tax strategies and bookkeeping?
They just don't know what they don't know. A lot of people will come to me at the top, in April when the taxes are due. Typically, you're in April, and they'll say, "Steve, I had a great year last year. How do I save all this money?" And I'll have to do the big whopping timeout and say, "Guys, we got a plan in October, a couple months ago." So that way we could get you ready. That way by the end of the year, we can minimize your tax liability. Or just before you even buy the deal, we need to figure out how you want to treat that deal. So that way, when you go from opening escrow all the way to selling and closing it, you keep a big chunk of that money rather than just writing a big check to the government.
Yeah. So when people, investors kind of go into this, there's a lot of from what I see, there's a lot of let's go do the deal and worry about the consequences later, right?
Absolutely. And don't get me wrong. I mean, I think we're all treasure hunters. It's like the movie Did you enjoy the movie National Treasure, Andrew?
I love it.
Right? Trying to find that treasure, trying to find that next secret underneath a brick or whatever it is. That's what we are, right? We're treasure hunters, right? And we love the art of a deal. And sometimes we get so excited trying to find that pot of gold, we forget about the structure. We forget about how long it's going to take to sell it. We forget about sometimes even the supply chain, how long something's going to take to fix it up, because we assume it's going to be like the last deal we did. And then during COVID, I think we all learned that supply chain changes every month now. It's not like what it used to be, where you can make one phone call and you got your kitchen cabinets.
Yeah, that's very true. We're dealing with the kitchen cabinets now. All right, Stephen, so we're going to go back a little bit because our audience here is mostly investors, people that are getting started, and we like to get our guest on here and find out, where did you get started in real estate? What was your first investment deal like? Let's talk about that, because I think it lends to who you are as a tax strategist or accountant, CPA, and how you work with investors in their business. So let's talk a little bit about your real estate investing. What was your first deal? Can you remember that one?
Yeah, so I have two. So the first one we'll talk about is when I was a senior in college.
Yeah.
I actually scrapped up some money, studied some nobody down some formulas, and I bought my first foreclosure when I was a senior in college, and bought the house for $210,000. It had a hole in the wall. It had a hole in the ceiling. There was water damage everywhere, and I lived literally in a utility closet for 6-7 months when I bought that property because I wanted to fix it up, and then ultimately after I fixed it up, I moved into it when I graduated college.
Wow.
That was my first deal, and I kept that house and sold it. About 10 years later, I sold that house. That was my first house that I lived in. Great house. I still miss that house. I like simple living in a lot of ways. That was the first one. My first investment deal was a duplex. I bought in Bakersfield, California for $65,000.
Wow.
So, and the hardest part of that deal was the lenders were telling me it was too small a loan for them to issue. But I hustled and I found a lender to get me the loan. And I think on that deal, I got 90% financing. We actually found a lender to give us 90%. We had to come up with 10% down. And it was the scariest day I ever had in my life, where I'm at the closing table and my hand's shaking as I'm signing all those documents because I had no idea. It was like, oh my God, I'm going to owe $60,000 to a bank.
Yeah.
How much? I mean, what if a tenant doesn't pay? What if there's an earthquake and the building, has a problem or whatever? I mean, there were all these what ifs that came in my mind.
Yeah.
And fortunately, we did really well on that property. We sold it, and then we 1031 exchanged that property to a fourplex. And those of you that are new on the call that are not familiar with some of these terms, a 1031 exchange is just a rule the tax code has where you could literally take the profits from an investment and transfer it to another building or multiple buildings. And the government gives you 45 days to identify the new building you want to buy. And then they give you 180 days from the day you sell your old building to transfer those funds into the new building that you identified. And so we did that. We rolled into a fourplex cash flow. Then we sold that fourplex and rolled into another, I think 2 or 3 different fourplexes. And then ultimately we sold those fourplexes and started buying mobile home parks and storage facilities with that duplex profits and the fourplex profits back in 2006.
Wow.
So that gives you a little history,
Yeah.
just
Absolutely.
building blocks from
And that's one of the building blocks, the growth, the small moves make huge changes as you go over time, and planning. And we'll get to that in a second. I got to ask you this: how did you find the foreclosure? Was it on the MLS at that time, or how did that come from?
The foreclosure actually came from a relationship with a realtor. I built a great relationship with the realtor, and that realtor at the time, and then this is in the late 90s, real estate was not very popular. You were able to find anything anywhere, and people were not too motivated to buy it because interest rates back in those 90s were in the high 7s, 6 and 7%. So it wasn't what we experienced the last couple of years where they were in the 3s and 4s. So the real estate agent found the deal, told me about it, and I said, let's do it. Let's buy it. Let's see what happens.
Yeah. So that's amazing. One of the things that we talk about in the Deal Finders Club is that when you're first getting started, there's deals all around you, and it even shows you back in the 90s, right? Oh, it's so long ago. But even then, those deals are right in your neighborhood, right in your community, and you can find them through relationships. So, guys, if you're just getting started or you've been doing this business and you can't get traction, you need to invest in those relationships, build your network, go to local events. We have local ones here just about every week, but you don't have to just do that. You can do online events, get connected with people that are in your market, okay, and use that, build that so that you can go find those deals. And so let's talk about that, the growth. I love the stair-step path method, however you want to call it, where it's, there's one deal, maybe it's a single family or a duplex. You work it, you rent it out, get it ready, sell it, take the profits into the next. Were you doing strategies at that time? Were you working in the finance business then, or did you kind of figure that out after?
No, I was in the tax industry. I mean, I grew up in the tax business. I mean, instead of having our family, instead of having a dairy farm, we had a tax firm. So as kids, we were, every weekend, we would be filing paperwork, updating the tax code with, that back in those days, it was pieces of paper to update the laws in a binders. Yeah. So that's what we did as kids. Instead of milking the cows and on the farm, we were filing papers and helping out on the tax side. So I learned early on, it all starts with your first project. And there's one of our longtime clients, I'll call him Bill for the call here, but Bill drove literally an old pickup truck. Remember those old yellow pickup trucks that were Toyota pickup trucks from the 70s?
Yeah.
So Bill was probably worth, 10, 20 million bucks, and he was still driving that 1971 yellow pickup truck.
Yeah.
And he would always come in a grocery bag with his papers.
Yeah.
And drop them up. And he was our wealthiest client.
Wow.
And he probably had 50 houses in the area, just collecting the rent in Los Angeles. And as you can imagine, what that portfolio is worth today, having 50 homes, collecting rent. And he'd just drive around and he'd fix up his own properties and had a lot of pride in maintaining his yellow 1971 Toyota truck and loved it. But the reality was he loved his family. He had a lot of free time. And he loved his tenants. He loved to build relationships with them and take care of them, and they took care of him. And he had a great business. And I realized that early on that when you take care of people around you, you have a great life. And then you also have a lot of free time when you set it up properly. Yeah. And that's what I learned with Bill, that you could still have a large net worth without having to work 100 hours a week. Yeah. And that's what got me excited about going into real estate.
I love it. And of course, growing the business. So let's go back and kind of explain that 1031, because we hear it a lot. I think maybe because podcasts, Bigger Pockets is one that's all over the 1031 exchange. Like I heard it years ago, and there's just questions. It's a little scary. If you actually try to do it, you have to follow rules and things. So, and can you give me a little bit more detail on that? I've heard you have to have a custodian to hold the money. And you have to, like you said, identify by certain times. You have to spend a certain amount of money. Can you answer some of those questions?
Absolutely. So let's talk about the word custodian. Custodian just means it's a third party to be in charge of the money. And in the 1031 world, the government likes to call that the accommodator. It's the third party that's going to hold the money as you find your next deal. So what happens is when you sell a property, let's say you sell a property for $100,000 and you bought that property for $50,000 cash, and you're selling it for $100,000, so you made $50,000 in profit. All $100,000 has to go into this third party account. So when you sell the property, you can't just hold on to the money and then reinvest it. You have to literally tell escrow, hey, I want you to put that money over here at the accommodator's escrow. That's the third party to document the day of close and how much money went in that account. Because from there, when you find and identify your deals during that 45-day period to identify them, you have to tell this third party, hey, I identified property 1, 2, and 3, and you have to point to those properties and in writing, spell it out, send them an email, and the third party group, the accommodator, is going to send you a document to sign and all that good stuff. But then this is where the real action begins. Is now that you identify the property, government gives you 180 days from when you sold that property for $100,000 to buy the new property. Okay. And then when you're ready to buy it, you have to tell that third party, transfer the funds to that other escrow to buy that new property for, let's say, $400,000. So in this case, you have $100,000 from the old deal that was paid for cash, and now you're going to have all $100,000 going to the $400,000 deal, and then you're going to get a bank loan for $300,000 to buy the deal. But the beauty is that the money went from one escrow to another through this third-party accommodator account. The government will say, through the proper forms on the tax returns, that you deferred the profits from property A to property B. And that's the definition of a 1031 exchange at a high level.
Right. So you didn't actually take any profit out, thus they don't tax you on that income, right?
Correct. They don't. That's right. They don't.
And so you said you had to put the whole 100,000. So it's not just how much money you made from selling the deal, the first one. It's also the amount of capital you had invested in it.
Correct. Now, if we want to get technical, you can pull some of the money out, which could be offset by your closing costs, for example. So let's say your closing costs are $10,000, and you put $100,000 into the deal. You could take out up to the closing cost amount of $10,000, or $90,000 in that example. The $100,000 minus the $10,000 equals $90,000, and then that $90,000 could continue to go into the new deal.
Right. So it is. There's a lot to it, and there's a lot of people that are like, "Yeah, I'm going to go 1031 exchange this deal and moving on to the next." But they don't actually understand. Again, like we talked about earlier, that takes planning. You can't just show up at closing table and say, "Yep, 1031 exchange," or show up in April and said, "No, that one I 1031 it." I bought another property after I sold that one. Right? This all takes planning.
Correct. Takes planning.
Yeah. So you moved through the duplexes and the quads and apartments and into the storage units now, right? So let's get your tax opinion, right? What's the best asset class for people to look at? Is there a better one? Is it something that saves there?
It doesn't matter. What matters is your supply chain and your team around you. Because if you have the right team and you have the right cost structure, you can make profit in practically any type of real estate. It just comes down to how much you're buying it for and how much it costs to maintain it, to make your yield if you're going to keep it or to sell it.
Yeah, that's awesome. That's good.
Yeah,
exactly. It's great advice. I asked that question because a lot of, especially new folks, but even people that have been doing this for a while, they see this shiny object. Oh, storage facility. That is the place to go right now. It's the best, blah, 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 all these reasons. And it's all the same if you work at the right, if you build a business around single family, you can do really well. Storage units, the same thing. Pick a niche, right? Pick a direction and go in it, because real estate has just about anything you could think of to make a business out of.
That's right. Don't get married to the property. Don't get married to the deal. For example, when interest rates were their all-time low, a couple years ago, I sold a lot of my portfolio because I saw the writing on the wall that the interest rates are going to go up, and that those cap rates, which is a metric to define the values, are going to go up. So the lower the cap rate is, the higher the value of a property. So when you're dealing with commercial properties, cap rates were at their historic lows. I mean, in terms of at their historic highs for property values. So we decided to sell, and move on. So that's the key, is just don't get married to any property.
Yeah, I love that. So what can you've been in this business for a while. You grew up, like you said, you were filing tax papers. You've been doing this for a really long time. So I think it would be really helpful for new investors and experienced investors to know what is a true tax strategist and finance strategy look like for an investment company. So like, kind of what would your company do with somebody that's has a couple of duplexes or rentals or does 10 flips every year? What does that look like?
You said a whole lot there. So if they're buying and selling, flipping property, I would definitely look at a solo 401k plan as an example if you're self-employed. Because what a solo 401k plan could do is it could be the custodian for your money. That way, when you set up an LLC or a limited liability company, that limited liability company can be capitalized by this 401k plan. And then that LLC could buy a property, flip it, and then the profits from that flip can go back into the LLC and then ultimately back to the 401k plan. And for example, if you get a loan, you have to just make sure the loan for that environment is not guaranteed by you. It's guaranteed by the asset itself only, not by you as an individual. Because if you personally guarantee a property in that environment, your whole deal is going to blow up from a tax perspective. So those are great ways to create a bundle of cash inside a retirement vehicle, as an example.
I love that. Yeah. And so I led off the podcast with, hiring the right strategists, the bookkeepers, the CPAs, your financial team, like you mentioned, shouldn't be an expense. What does that mean for investors? Can you expound on that a little bit?
Sure. So let's say we were to put together the strategy, help you with it, guide you along with it. And let's say you bought a $200,000 property and sold it for $400,000 and made $100,000 in profit. And we put it through, let's say, a Roth 401k plan where you could pay no tax for the rest of your career. You're potentially saving $30,000-$40,000 in tax. It doesn't matter what the strategist would charge. Let's say they charge $5,000 to help you with that strategy. It's a fraction of what you would be paying the government. So it does, and some folks get it's like the old saying, they're penny wise and pound foolish. And what I learned over the years is pay for the right advisors, because the wisdom they're going to give you and the amount of time they're going to save you and the amount of money they're going to save you, it's a fraction of the cost than what you ultimately would be paying if you don't get the right advisor or the right structure.
Yeah, that is so crucial, because when we're dealing with flips and we're dealing with, $10, $50, $100,000 profits, that tax liability goes up quick, and like you said, having a proper tax strategy and a proper team behind you can in one transaction save you, tens over, $10, $20, $30,000. And I feel like there's a lot of people that just don't move into that spot. They just are busy doing their business, and they don't sit and plan for that moment, right? And that, like you said, they show up in April. So before we go, I'd like to have you just tell people, what is that first step? How do we get out of doing the business long enough so that we can think and plan and maybe talk with somebody like you?
It's really simple. Pick up the phone or shoot an email and say, hey, I need help. Ask for help. That's the first step. And don't be afraid. There's no such thing as a dumb question, because I'd rather have the question asked than you never asking it and wondering what it is. What's the answer? Yeah. It's pretty straightforward. And Andrew, throughout your career, have you received a lot of help from folks around you in your ecosystem?
Absolutely. Yeah. We are always leaning on our people around us, the professionals around us, like you said a minute ago, the right advisors. Yes, they save money, but the time, as I'm getting older and wiser, when the kids are getting older, it's the time and the energy that really, that's what makes the impact to me. With the right people can save.
I agree. The older I get, the wiser I feel like I get, because I'm wise enough to know what I don't know, and to have the best, most incredible people around me to help. And I think we're both in that help button where we want to help as many people as possible, and we want to give them the right options, like a sushi menu. So like today, we're not telling you to buy storage facilities or mobile home parks or duplex. We just want to give you some formulas, and then you get to decide how you want to execute those formulas.
Yeah. I love that. Well, Stephen, do you have an email or website? How can people reach out to you if they want to contact you?
Absolutely. They can go to our website at www.roberthalltaxes.com. And you can always shoot me an email, which is actually it's really simple. It's Robert, Robert, at roberthalltaxes.com. That's a great way to get a hold of us, and we have a great program. If you want some help, we have a 30-minute program that folks can jump on board. It's free, and we'll analyze your tax situation, even if you owe money to the government and you're not sure about something. And we'll give you our 2 cents, and if you're interested, we could help you. If not, then it didn't cost you anything.
Yeah, I love that. I love that, and I appreciate that about you guys, that you're willing to spend some time and help people at least answer those burning questions and take a look. So hey, is there anything else that you want to leave for the podcast listeners and viewers before we get out of here?
Well, the big question, always ask questions. And wow, I think the last thing I would lead with is if you're not sure about something, just ask for help. And Andrew, I know you provide a great training programs and help people. And I'm sure some of your best students are the ones that ask you lots of questions, right?
Yes, absolutely.
That's awesome.
I love it. Yeah. And they're always asking, the ones that are always asking questions, they're the ones that actually are progressing as well, right? They are moving through and getting to the next thing, because one question ultimately is a block for what they need next. And if they never ask that question, they're stuck. And I don't know that you're stuck there, right? So, this has been an incredible podcast. I really appreciate your time, Stephen. We will put the link to your website in the show notes, and y'all can watch this on YouTube or, anywhere, the podcast. Just make sure you like, share, subscribe if you felt like this was helpful for you. We love to try to share these podcasts with other people that might find value in it. So if we can help you with anything, our website's dealfindersclub.com. And until then, go out there and find a deal and find the advisors, find the professionals around you to help in your business today. We'll see you next time. Bye.
Thanks for listening to the REI Deal Finders podcast. You can find out more and apply to be a part of the REI Deal Finder community at reidealfinders.club.